All right, well, let me begin by saying hello and welcome to another weekly edition of Stock Market Mutterings. This is for the week that starts on August 19th. I do hope you guys are doing well, and as always, I will try to take a grope in the murkiness here, make some sense out of this market, try to share with you my trade ideas, my trade setups, and I hope they put some money in your pocket before the week is over. As always, if you guys need help with your trading, you're struggling with this market, it's definitely wild, you're having all this volatility, so if it's kind of the first time you're going through it, or you're not excelling as well in this type of environment as you should, take a moment, visit that link right there, thelincolnlist.com. You can trade with us live. So I want to go back and I want to talk about last week's market mutterings. And to me, the tone of how the week was going to go had a lot to do with that prior Thursday's close. And we talked about that in market mutterings. I said if we were able to get over the 294 area, this would be the 8th, August 8th. If we were able to get over 294, then you start getting that whiff of the all-time high talk again, and I think everybody would get, uber bullish, and they try to run this market right back up to the highs. On the other side, I thought if we went underneath of that, and why I felt that was important is because the only viable means of support underneath of that was going to be testing the lows from the 5th and the 7th of this month, which is down there towards the low 282s. That's where I thought we would go. And that's what happened. That's the route. Again, this is what we do as traders. We sort of pick these options. We come up with these analysis, and we have a plan A and a plan B. So my plan A was if we went over top of that 284, that we would be strong. The market would be bullish. We'd want to be a little bit heavier long. Once we got underneath of that and we would possibly trade down to the 282, then our bias needed to stay to the short side in most cases. And that's the way that it went. As soon as the week started, it sold off there, and it ended up walking its way all the way down there by Thursday. Now, we had a little bit of a funky week here. This is where technical analysis and the market variables, this is a market trading. Things can happen at any time. And to me, by the time the week ended, the only thing that was saving the market, that you had this big day here, I believe it was on Tuesday, was just on this tariff tweet stuff. It's like if that didn't come in here, the market would have just kept on selling off. But that bought it another day. It sold off the next day. And right now, going forward, that is going to be your range. It's going to be 282 to the downside, 294. I know it's a wide range you're dealing with right now, but when you're looking at ultimately picking a direction for the next very explosive move, if you're going to go under 282, you're probably going to go right through the 200-day moving average. I think my face is blocking the screen, but if you lose that dollar amount going through the week, you'd probably look at 6.3, June 3rd's low, which is roughly 274. So I would expect if we get weaker, you get underneath of that 282 at some point, you're going to see a little bit more selling, a little bit more aggressive selling, a little bit more panic. It probably quickly takes us down there, and then we'll reassess the situation. Of course, if you want to see, bullishness and calmed nerves, you're going to have to get back over 294. So that's the range. Again, you're going to be playing with wild ranges here. This is just something that the market goes through every so often, is these corrections. And when it does, the volatility gets high, people get shaky, the market makes these wild moves, and you're just going to have to learn to trade through it. As we always say, you pick your spots and use your stops and take your shots, and you'll be fine. And that's what you got to do in this type of market. Now, let's take a look at some stocks, because there are still a handful of stocks that have held up incredibly well. And as I'm going through this and I'm doing all of this chart work, I'm noticing, man, there's a hell of a lot of bull flags still out there on some of these names, which we'll get to later. I'm first going to talk about Nvidia. And they had earnings there. It was, Thursday night. Let me put this daily chart here a little bit for you to see. Now, this is not a bull flag here on the daily, but this was a pretty strong move here, closed into the gap from the second. Now, this stock's been not what it was a year ago. I mean, it's been on a long downtrending fade, and it's definitely had its share of problems, and it has exposure to tariffs and stuff like that. But I think with these good earnings, it's not unlikely that these things can run 2 or 3 days at a time. It held up relatively well. No, not relatively well. It did hold up very well on Friday. So what I'm looking at is you got the 20 moving average right here and its 200-day moving average. they're connected right about 163. If you can move yourself through 163 here, you've got a lot of void up here that you can fill in around 173. Now, I'm not saying it's necessarily going to go that way, but if you do a lot of day trading like I do, there's going to be a lot of opportunities in this stock. I would think even if the market sells off, with their earnings and the way this has performed, it should hold up relatively well. So I'd look for pullbacks into the 158, 156s, clusters where you have intraday support like you had here on Friday, where you kind of wash out and build a base where you have a double bottom or something like that using your technical analysis, and then just try to let it just get supported back up and lift back up. So I want to watch this one going forward. I think there's going to be a lot of different trades on this, mostly leaning to the bullish side, barring any unforeseen circumstances that may encounter with this market, but I do like that one. Now, one stock here that I'm kind of changing my mode with is the almighty TWLO. This did not participate in the rally on Friday. And this has normally been a really bullish stock. Now, if you look at this chart, you have come down into this level, which is really extremely important. You can see it. I mean, this 121.80 spot you're going all the way back to April. And the further you go back, when you guys are talking about ranges, supports, and resistance, and these levels, these numbers that you trade, they mean something. And the further back that you go in time and you start taking out levels, the more potent, the more powerful these moves can be. And that's where you get these huge range breaks, So when traders are wondering, why in the hell does the stock move so fast and so quickly at a certain level? Well, there's your answer right there. The technical analysis will tell you where the buyers are and where the sellers are. Now, you're looking at this chart, and it has touched this, I don't know how many times. It looks like six times here. You touched it on April 3rd. You were back there on May 13th. You had 3 or 4 days in a row at the end of May, and then you were back there a week or so ago, hanging out in the same level there on like the 6th and the 7th of August. And here you are while the market was running and really strong all day Friday, not participating. So what does that mean? If this goes, this is most likely a short. That's a monster level. And if that breaks, you're probably going to see a strong flush. And there isn't any support left until you get down into about 110. So there's some room in this thing. Man, there's some room in here. Now, on the flip side, this could hold it. So let's say we have a really strong market all week next week, and this thing bounces off of that a couple of times. Maybe it turns out to be a long. Maybe it really solidifies that support for an 8th time and then bounces back up into the gap. I don't know, but you really got to pay attention to this. It'll sit at a critical level right here, and the decision will be made by the market, and you'll find out. So I want to watch this TWLO real close. Now, I mentioned there was a lot of really strong charts still left, and a lot of them are on these thin type of betas here. I kind of like the look of this WDAY here after a small pullback going into its 200-day moving average down here on the daily. I think if you were looking for the stronger move, you'd have to wait for a 194, get a 194 break of those previous highs, and you could probably come in here and either connect with the 20-day moving average, which is $200, and maybe even 207, which is the 50 moving average. Now pay attention also, they've got earnings coming up on the 29th. That's not an issue here in the immediate future, but I want to watch this one again. If you start to see that move that comes out of that range after it's consolidated from this market sell-off and it pulls back a little bit, if it's able to break that, I'd look for this one here too. Now another thin beta, as we call them, is this PAYC. Same thing. The market's gone through its phase of correction here, and this is a stock here that's held up very well. I mean, look at this thing still hanging around, floating towards its highs. Now, if you got a couple of levels here, you got a really, let's say it's an ugly beer goggle style triple top on this daily at 245. So there's some room right now where it sits from this 241, possibly trading into that 245. And then maybe if you punch through 245, you'll get that nice little all-time high, parabolic, squeeze up, breakout, some chasers pile on. I don't know. But one of the things I do like to look for is when the market goes through these corrections and you have those heavy sell days and it just goes down and down and down. If you look around and you find the ones that have the relative strength, the ones that are still really strong in that market, if and when the market decides to turn around, those are going to be the ones that go first. And those are the ones that are going to offer you the best plays if you're going to go to the long side, if you're going to the short side and go find something else. But watch this one here. It's held up well through all of this. Needs a little bit of work, but just like an Nvidia, maybe it doesn't ultimately reach that breakout point. But I think going forward, you've got a lot of trades here that you can make with this stock. And you're just going to have to look for your intraday levels again, finding support spots where throughout the day it builds a nice base, making that not the most reliable base in the world, but you've got a number to work with, a 238 like it did on Friday, holding that level for a period of time and then working its way back up. So a lot of stocks will do that. Once the market starts to open and all that fear comes into it or all that emotion, once that gets shaken out and the market settles down, it normally starts to pick a side. And this is what you saw in this case. You had a couple attempts to try to get it underneath of the 238s. Didn't work, and then next thing you know, it starts rolling up. So when I look at stocks like Nvidia and I look at stocks like WDAY, PAYC, that's what I look for. If they're not going to be breaking out on multi-time frames, I look for these intraday levels like that to try to pick a nice little spot. Now another one here, this APPN. I mean, look at that daily. Jesus, huh? This is affected by none of it. I mean, man, look at that. That's impressive, huh? Now, if you happen to own this, and you're like, you bought this and you forgot you had it, good luck. Good luck to you. Not good luck. Congratulations to you. I want to look at it short. I'm not so excited about just jumping into something like that. And I'll tell you why. There was a period of time there a few years ago where you could just jump into something like this and it would roll over. I mean, you had pullbacks in the market, but over the last couple of years, even in bearish markets, even in sell-offs, it's sometimes hard to get these things to continue to just break apart, even when they should be. I mean, you can go back and you can look at, like Beyond, for example. Yes, it's pulled back significantly from its highs, but it's taken a while, and it's still up a hell of a lot, right? I'm not saying this is going to be like that, but this is seriously vert with a really high RSI on the daily. So what does that mean? I'll look at it. If I find some intraday levels where you've got some nice pivots like it did today, where it kind of runs up here, stalls out, and you got an area where you can control your risk, then you can catch a nice little fade. But I would expect that some course throughout the week, you're going to see at least some profit taking or a little pullback on that. And a good reference point would be to use, let's use Roku. Roku's a good one there like that too. Here we have a really extended daily, and even the good stocks do that. They'll come up here, Roku running from its earnings, going from 98 to 140 and then pulling back to 130. So that's $10 pullback here in that, and the daily chart's still bullish. So when you're looking at them and you're saying you're not saying it's going to crash, it's going to go to zero, and it's just going to melt down to hell. It's just there's $10 right there in Roku on just a small fade, settling back down into moving averages. So you want to look for the same thing here, I think, with this APPN, and see if that one maybe pulls back to 55. So anyway, guys, I'm going to leave it at that. It's been a long week. This volatility wears the old man out, man. I'm telling you. No free lunches here. So if you do need some help, as always, reach out to me at support@thelincolnlist.com. Thanks for watching this week's Market Mutterings. Until next time, trade well.